it's going to be Amazon today, and it's really, sometimes you get pretty fortunate when you get whipsaw action, and you have to have a plan of action, because truth of the matter is you got to prepare to get lucky, and that's what happened here today for me on Amazon. I want to set the stage a bit. Everyone knows it's quad witching, options expirations, index for balancing. What that does mean is you are going to have crazy whipsaw action right at 9:30. You're going to have increased volatility, increased volume, and sometimes you can use that to your advantage. Now, you watch this live show, you know I've made the top wick plenty of times, or bottom wick, getting in and out and just have horrible exit points when it just breaks and then it reverses the other way. This time, we're going to talk about something different. Now, clearly you care about some strike prices here. Amazon, even on my 15-minute here, did have a previous day top right at that 105 at the open. So big line in the sand at 105. Obviously option price there as well. You don't really have the 100 in play, but you did have this bottom band, 101.50 to 102, which would have been the week low at 101.50. And then you've got this 102 band from yesterday's bottom. So all I'm thinking when we come in today is, well, I want to play off of those two levels. That 101.50 to 102 band for support and the 105 for resistance. And sometimes, like I said, you're going to get a little bit fortunate because this comes right down to 102 and change. We're waiting on the bid. And this is the thing about this market. When there's increased volatility, wait for your price. If the market is coming towards the level that you want, do not get FOMO, especially at 9:30. It is so easy to say, oh my gosh, it's going to snap off this level. It's going to snap off this level. Get in, get in, get in, because you're afraid to miss the trade. But just wait till it gets all the way down to the bottom. I was sitting on the bid before the market opened, so I was fortunate enough to get that fill. Now, of course, the whole time I'm thinking, well, I initially loved the 105 short, so we're going to make sure that we take this out on the way up. We get out in the consolidation range that we had here off this 103, 103 and a half price, and then it's about the reverse at 105. Now, I'm going to take this every single time. What I'm going to get to in a second is the V-shaped bottom here and why it turned into a long trade that I didn't get back into until it was above 105. But we do take the short off of that 105. When it curls, I always allow it to reject the level first, especially at that time, and then try to jump into the reversal. We got it down one level for the scalp, thinking we're going to get a chance at this 103.50. At the same time, simultaneous to this, Tesla made the same setup. I missed a bid on Tesla by about a couple of dollars, but was able to catch the short off 650. And that gave me both levels down. But as it was snapping up, I actually moved my bid up on Tesla by a couple of bucks, was able to get out. That started coming to the upside. The market was breaking back up. There was no real chance there to kind of get more shares out. It was just a huge snap that stopped me out. So I was able to get it all out on one short, but not on the other. That's how fast this market moves. Once things settled down above this price, it seemed to me that we should have just been in this jailbreak mode from 105. So we did end up starting to take that dip buy in front of the 105 price, gave a nice little scalp. I'm holding on to it. Then it stops out below. And then this is where we start to overtrade it a bit. And thankfully, I got away from this nonsense pretty quickly. We reversed into a short, we scalped it, and then immediately we're just scalping right out here again. It's like, no, don't do this nonsense. We thought it was a long when you get a V-shaped bottom, right? You get a huge wick off bottom through the low, and then you break out at that 105. At that point, I need to see it break down and hold below before I'm going to hold that short. Otherwise, I should be shorting off the high of the day trying to play a VWAP trade. That's usually what I do for the shorts. I end up putting that one on and it doesn't get a win. And this is what I mean about that V-shaped bottom. The initial read was to go long off that support and play it into that resistance at 105. When there was no follow through on that little short through 105, the only trade you got to be thinking about there is a long. Now I get it. It's still going to be a positive stock because you end up winning more on your wins than you have on your losses. But this could have been easily the best stock of the day for me if we'd simply just only had that long mentality off that 105 level. It just gives you so many opportunities. Yeah, maybe you're not going to be able to hold it in here. But if you flip back into the long, you're now buying off of these levels and you're playing it out where you're thinking short off the top. I'm not saying you catch the breakout, but even if you broke out 106, not that bad a trade either. When you get wick off bottoms, you have run stops out at the lows, you've gotten the panic sellers out, and then you've broken support and trapped some short trades. Those are all things which can lead to a bit of a trend to the upside. Now, I'm saying all this when it was a very weak market in the morning, so it was not an easy read because things looked like they were falling apart. However, when you see signs of strength, stick with it, especially when that's how you started out with the long.